Guys, it's Qora Digital Cash here again. Thanks for all your messages after my last video on how you can grow your small trading capital. We will continue from there today, but before we go fully into it, let me quickly say a few things about fiat currency markets, okay? Because I promised us that we will be checking out fiat currency markets also in this year, and also we'll be checking out crypto assets also in this year, okay? So I will be combining the three major markets together: synthetic indices markets, fiat currency market, and crypto trading market. Okay, so these three assets are what we'll be checking out on my channel in this year, because I believe we all can make a lot of profit within these three markets. Okay, quickly, fiat currency market opened yesterday after a very long holiday. The festive holiday, and just the way you have seen it, yesterday's market was somehow, because the spread was too much. Okay, it was just too much, guys. The spread was too much, so it would have been a bit risky for most of us to go into. So that is why I have not been saying much about fiat currency market at the moment. Okay, even as of now, we can see that this is Euro USD right here on 1 hour time frame. You can see that it's just coming up from from the support zone, and it's really moving up very well. But at the same time, the spread is still too much. You can see the distance between the two lines. Okay, so it means that the spread is too much. Okay, in case you're not seeing it very well, I'm going to take the time frame to 1 minute time frame so that you guys are going to see it very well. Okay, this has actually, okay, you can see it right here. You can see it at the top right here. Check it out. You can see the distance between the red and the green line. Okay, that is the spread. Okay, it is too much, which means that it will have to drag, if you are to place a sell order, it will have to drag this red line down very well before you can hit your take profit. Okay, probably the green line will have gotten to your take profit, but it's not going to close it, not until it is able to drag the red line across your take profit. If it does not, then definitely it will have a pullback. So the spread is still a little bit high at the moment. Let's check out other assets before we move on to synthetic indices. Okay guys, you can see this is AUD USD. It is also having a huge spread. Also, let's check out AUD card. Okay, this one is even bigger. You can see the big spread right here. Check it out. So the spread is still a little big. This is the issue is that the market is just opening. Most companies are just resuming back to work, and of course the market is not totally stabilized at the moment. So I would say that if you are going to trade within the fiat currency market, trade carefully. Okay, because this spread is too much. Okay, trade carefully so as not to lose your profit. Personally, I will have to wait till this spread is put under control so that we can trade successfully. So for now, I will be focusing more on the synthetic indices market. Okay, we started the topic yesterday on the synthetic indices market, and we will be rounding it up today because we'll be checking out other things later on in the week. And of course, it is how you can grow your $20 account into $100. And I got so many amazing testimonies from my subscribers, and I'm really happy about this. And we will be checking out, I will be throwing more light into it. I will be sharing with you how you can do it better this time around, okay, so that you will have more confidence whenever you are trading. So let's go to the PC platform right away so that we can have a better understanding of what we're talking about right from here. Okay guys, I welcome you all to the PC platform. Okay, like I said earlier on, we will continue from where we stopped yesterday, which is on the topic how to easily grow $20 into $100 trading boom and crash. But before I go fully into it, in case you are joining me for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the Forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, practice and perfect your trading skill first on your demo account, then you can now try them out on your real account. Okay, this is very, very important. Okay, and of course, if you love my videos, can you give me thumbs up and share with families and friends? If you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. So quickly, let's go straight into what we have right here. Okay guys, like I said, we will be looking at how to easily grow $20 into $100 trading boom and crash. Okay, there are some things that you need to take note of. Okay, yesterday I showed you how to set up your account and how to get started right from there, and of course I showed you some of the things that you need to identify. Number one, which is going to be the trend. Okay, the trend, that is very, very important. Number two is going to be your support and resistance levels. Okay, all these are very, very important, and of course your lot size should also be very reasonable. Okay, it should be cool enough for the capital you want to use. Okay, and there is one more thing you need to take note of. Okay, even though we all want to grow our small trading capital into a big account, but we need to know that with small trading capital, we cannot start to make big amounts of money just with big accounts. We make big amounts of money, so you should take your time to grow your capital gradually until you get there. You shouldn't add greed to whatever you are doing. Okay, this is a real business, so you should treat it as a real business. Follow every instruction to the dots. Okay, you heard that right. Follow every instruction to the dot. Okay, so that is very, very important. Do not try to outsmart the market or the instruction you have been given. Okay, so when you are trying to outsmart the market, that is when you lose a lot of profit. It will now look like you are not getting it right, or probably the strategy you are using is not working for you. So you need to follow all the instructions to the dots. All these are very, very important. So we will be moving down to the market right now, to the chart right now, so that we try to see what we can lay our hands on. There are 6 different assets you can trade. We have boom. Okay, sorry, we have boom. Under boom, we have 1000 indices. We have 500 indices, then we have 300 indices. While on the crash, okay, we have 1000 indices also, then we also have 500 indices, and also we have 300 indices. I'm just trying to give us a brief summary of what I have explained yesterday in case you miss out on yesterday's video, so that you can understand from where we are starting today. Okay, so you can trade any of these assets, but the most volatile of all is that of the 300 indices, either boom or crash. Okay, 300 indices is the most volatile of all, so I won't advise you to trade it with a small trading capital. Okay, I won't advise you to trade it with it. Of course you can trade it, but it's more risky to trade it with a small trading capital, because a little reversal of the market against your own direction can wipe off the whole of your account. Okay, so that is very, very important. You can make a lot of profit with it and you can lose a lot with it, so it is important you start with 1000, because 1000 is not as volatile as the rest of the two. Okay, so you can start gradually with either boom or crash 1000, then as you are growing your capital gradually, then you can now move on to 500. Okay, they all follow the same method of trading. Okay, they all follow the same method of trading, either 1000 or 500 or 300. They follow the same method of trading, but the volatility level is what is different. Okay, is what makes one different from the other. Okay, so that is very, very important. So that is why, since you are starting with a very small capital, let's see how we can start with 1000 indices. Then when we are able to grow it up to a reasonable level, then we move, we can now add 500 to it. Okay, now that we move from 1000 to 500, we add 500 to it, so you can trade both 1000 and 500 at the same time. Then later on you can now add 300 to it. Okay, then let's quickly say something about the lot size. Okay, most of you are always getting this confused. Okay, your lot size and the number of position to take. Okay, and the number of position to take. Okay, so this is very, very important. Remember, your lot size will determine how much profit you can make. It will also determine how much of the amount you can lose. Okay, how much loss you can also get from your trading activities if the trade goes against, if the market goes against your trade. Okay, so if you want to lose a lot of money, your lot size will determine it. If you want to make a lot of profit, also your lot size will determine it. Okay, so even if you say you are using 0.02 lot size and you open 5 trades, just know that you are already using 1.0 lot size like that. Okay, because you have 5 orders going on at the same time with the same lot size. That means you are, when you do the calculations together, you are already using 1.0 lot size, because 0.2 times 5 will give you 1.0. Okay, so that means you are already using 1.0 lot size. So these are the calculations that you should make, you should understand, so that you do your calculations very well before you jump into a trade. Okay, for instance, for $100 accounts, you should know that the maximum lot size you can use, I think on 1000 indices, is 3.0. okay, that is 3.0. okay, so, and of course you are trying to use 1.0 per order, and you are trying to open 3 orders, then you should know that you have exhausted all the space for your lot size at that point, because at the end of the day you open 3 orders at with 1.0 each, and that is giving you 3.0 lot size. So any little reversal or any little movement against your order will wipe off the whole of your account at that point. So all these are very, very important. So now let's move on to the charts right away, so that we get to see how to go about it. There are some other vital information which I will be sharing with you on this channel, but for now let's see how we can make some cool profit for ourselves right from here. So let me go to Boom 1000. Okay, let me go to Boom 1000. So like I have explained to you, it is important you know the trend of the market. Since we are not focusing on the spiky part, then you should stay away from this part of the market, from this particular part of the market, because it is on uptrend at the moment. Okay, you can see that there are little bearish candle being created right there. We have more spikes happening around there. But if you should check around here, we have more bearish candle being created and lesser amount of spikes being happening. And even when the spikes happen, it still keeps on, the market kept on going down and down and down. Okay, so that is one beautiful thing that you should take note of before you go straight into the market. And if you should notice, this is coming from the resistance zone. Sometimes it will take some time before it will decide if it will go fully into downtrend or not. Okay, and mind you, I want you to start from 5-minute time frame. Most of you will be thinking, okay, how will you be trading on 5-minute time frame with boom and crash when there can be spike at any point in time? Okay, except if you don't know what you are doing. I love trading on higher time frame, especially from 5-minute time frame upward, because it gives you more opportunity to make more profits once you come in at the right place. So, and this is a very good place for you to start up with. Okay, from the resistance zone for boom, from the resistance zone, and you start selling from there, while for crash is from the support zone. Okay, so you just need to spot out some of these things so that you will know how to go about it. Okay, and of course, in case you don't know how to identify some of these things, okay, my setup will help you to identify. This is the setup I'm using. It is the current, it is a custom made indicator, and of course most of my subscribers are having this indicator. It is called the 3M Train Nilka indicator, and you can easily get it, and let me use it, and that is what I will be focusing more on in this video. Okay, so right now we already know that the yellow flag is the uptrend while the red flag is the downtrend. Okay, that is the first thing we need to take note of. Okay, is the market a downtrend? Okay, right here it is on downtrend. Okay, is it coming from a resistance zone? Here is a resistance zone at the top right here. Is a very good resistance zone for you to come in right from. So once you see your sell signal right from there, okay, then you can place your order. You should know that it is ready to sell, but in some situation it's not just going to sell straight just the way it is selling like this, but especially when it is just coming from an uptrend into a downtrend, it's going to range around there for a while. Okay, just that it didn't really waste time right here before going into downtrend, so you need to take note of that. Okay, so you would have noticed it before you go into it. Okay, so right here you can see that at the beginning of the trend it didn't just give us the signal right there. It took a time before giving us straight signal. So once you see the sell signal and you see the flag being created, and of course you can come in right from there. But how do you know when to exit the market? You check out the next support zone. Here is a support zone. Okay, right now, because the market is just coming from an uptrend, it is very important you take note of that before you go fully into the downtrend, because sometimes the market might find difficult to break out from this particular support zone, so it makes the market to range around there for a while before going fully into downtrend. Okay, so right from here I expect you to close your trade somewhere here before it gets there. Okay, you close your trade somewhere here, so you can pick your trade right from here to here. So if you should do your calculation, that will give you some candles right from there. Right from here to here is giving us 6 candles. That is about 30 minutes time, 30 minutes trading opportunity. If 50 cents, if you are earning 50 cents per minute, that is going to be giving you 50 cents per minute times 30. Okay, that will give you $15. Okay, that will give you $15. That's amazing. So after the breakout from this support zone, then you can still come in again and trade till the next support zone. Okay, so you can see you can come in from the arrow and trade. Even if it spiked, once you see the red arrow again, you can still come in again and trade, because the market is on downtrend. So you can keep on trading and trading like that till the end of the trend. Okay, so let me quickly check out the let's see if I can get a very good example of a ranging area. Okay, this is a very good example. Okay, you can see it was an uptrend before it got to this region, and of course we can see that it didn't just go straight into downtrend until it was unable to break out from the resistance zone right there. That is when it gave us a sell signal around there. Even when it got to this support zone, you can see the support zone right here, it's still spiked up, okay, before going down again. Okay, now let's leave that. Okay, let's consider another one. I'm looking for a very good one that won't just go down immediately. Okay guys, this is a very good one. You can see this is coming from a resistance zone. Okay, so it gave us a sell signal right here. You can see after giving us about 4 candles, it spikes up, okay, even above your entry point. Okay, and right from there it went down again, gave us another sell signal right from here, and it got to that same level, spiked up again. The reason is it has been on uptrend before, and it was unable to break out above this resistance zone, and right here is another support zone. Okay, we have support zones right here, and here. Okay, so it needs to break out from all these support zones so that it can go fully into downtrend. So sometimes because it is coming from a very strong uptrend, the market might need to range around there, playing between the resistance zone at the top here and the support zone below here for a while before going fully into downtrend, okay, before breaking out below the support zone. So you need to take note of this. So when that is happening, then you can stay away from the market until it is able to break out below that support zone, so that you can trade with ease, okay, so that you can trade with ease. So once it breaks out from there, it might not bring out another red arrow. You can now come in and trade, okay. But if you have a very good trading capital with a very good lot size, you should have it at the back of your mind that even if you come in right here, it will definitely break out below the support zone after playing within the market for a while. So once it breaks out, then definitely it will go straight into downtrend. Okay, so these are some of the things you should take note of in order for you to trade successfully right here. So that is very, very important. So once you know all this, then you will be able to make a lot of profits for yourself at the end of the day. Okay, so this is how you can make some cool profit for yourself. You can do it gradually. Okay, this is for boom. Let's check out crash. Let me go to crash 1000. You can see it right there for crash 1000. Right from the support zone, it's just coming from the support zone and it is going on uptrend. So definitely you should have a buy order around there, and of course it will keep on buying. Of course there will be spike pulling it back once in a while because it is normal. Okay, there must be retracement. Okay, so these are retracement. You can see it came from the resistance zone, and of course, which means once you are approaching the resistance zone, then you should stay away from the market and allow the spike to happen. Then you come in again and trade. Okay, so that is it. From every arrow you can place your new order. From every arrow you can place your order right from here. You can place your order right from here. You can place your order right from here. Okay, and your lot size will help you to control the spikes around there, because the spikes won't be that much because you are on uptrend at that particular point. Patience is very, very vital when it comes to trading. Okay, you don't expect everything to go in your direction as it is. Okay, it's just like you trying to move out of the house. If you don't take a step, you won't move forward. Okay, that is it. So you need to push yourself outside before you can say you are progressing in whatever you are doing. So if you are not patient enough to overcome some of these stumbling blocks, then definitely you might not get to your take profit at the end of the day. So that is why you need to put all these into place. Okay, you need to put all of these, your trend, your support and resistance zone, your lot size, everything must work together in order for you to achieve your daily targets. Okay, all these must work together in order for you to achieve your daily target, and you should not rush into the market when the market is not suitable. Just like I have explained with fiat currency market, so many people I got so many messages from some of my subscribers, okay, about fiat currency market, asking me what is happening. Of course, you already noticed that the spread was too high. It was too much as at yesterday. Then you should keep calm and wait for the right time to go into the market. Okay, you don't need to rush yourself. Okay, if the market situation is not suitable for you to trade or for you to make some profit at that particular point, why don't you save your capital and save all your energy till when the market will be suitable? For instance, right here, when the market was on downtrend, some people will still try to see if they can pick up one or two candles in between. Meanwhile, the market is not favorable for the kind of trade they are picking around here. So why don't you wait for it to get to this support zone and go into an uptrend, and of course you receive all the signal, the buy signal and the buy trend, and of course you go into it and trade at that point. Okay, when you are patient enough for it to get to that level, then you will be able to milk the market for yourself right from there. So guys, this is where we will be ending this particular topic, and in my next video we will be shedding more light on how you can make more profit within these assets. Okay, so this is very, very important for us to take note of. So I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are in the description box below this video, and if you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. Watch out for my next video. Until then, God bless.